Good morning, everyone. I hope we get some action today. Yesterday just chopped around. It's what we kind of expected. Um, whether things are going to make a turn here to pull back or whether they're going to chop sideways here could be even into the end of the week. What we'd like to see for a continuation pattern is what we call a correction bar. We don't have that yet. So there's a few things to discuss. Right? I don't need much action. Okay, John, that's good to know. But sometimes a little extra action get you excited. All right. So we had the big dip, which violated the prior swing low, which we said, okay, the uptrend's over, black and white. Right? It's making higher highs, high and lows, breaks down, closes below, uptrend's over. Now, what's supposed to happen after a violent move like this is it makes a lower high somewhere around here and rolls back over again. Now, whether it's just the market having moved as much as it has, internals being where we've discussed, or whether this drop was just, a couple of days of panic over, margin calls, which that's what it appears to be for the moment. The retracement has been eyeballing this without getting my protractor out. Let's call it 90%. So you have to respect the depth of retracement, the ability to come back all the way up to the high. Now, whether this turns back down or whether it chops sideways, we don't know. So the thing to do here from this time frame is stand aside until we have a bar that, either could break out of this range without a correction bar. The ideal scenario is to get a correction bar. Right? So you're saying, well, what's a correction bar? Well, what we want to see is this bar that's live right here today would dip down under this bar's low and spring back up again, which would be, Dan and I did an MT Live a couple of weeks ago about tells. That would be one of our tells, meaning that correction bar where it broke through support. You can see that support right here on the intraday chart, would break down below it. And you can see there's very little, there's like nothing. These little pivot lows here, this is like nothing compared to this sideways price action in this time frame. So the ability to come back from a breakdown would say demand is extremely strong and they'd have to drive it back up again, and then we'd be comfortable with going long, even though maybe it hasn't taken out this resistance yet because of that little shakeout pattern. So we don't have that. The other thing could happen is, hey, it's up at resistance here. It's going sideways. It breaks down and it stays down, closes below 3,800. And maybe, it's got to find some new support somewhere in here where there's little to none. So it's a point in time here on the charts that we just don't have any clear defined pattern to say, hey, this is what is, and let's do that. So to speak. So we're waiting. The NASDAQ, or the NASDAQ 100, the Qs, the NQs, they were weaker yesterday. And we got a topping tail red bar at a prior high. Now, that's one piece of information. It's over here because I never want anybody to forget who they're talking to and that they don't need any of this stuff to figure out where turning points are going to be. So the depth of retracement here says respect the power of the move. This has been neutralized. Right? In large part, it's been neutralized. And so now, if this bar was to close deeply into here, this could turn into a continuation pattern. Now, this showed relative weakness yesterday, and today we'll see if there's any follow through to it. You can see where things are stabilizing. So it's kind of a wait and see. Same story here. Not exactly the same picture, but a similar story. And you're looking at the weekly charts, you can see why the depth of retracement is to be respected. Green, big red, big green. If it closes this way today, Friday, the end of the day, Friday. Um, so when we look at retracements and say, okay, that's a 90, 100% retracement, the fact that it's negating this red bar is another way of recognizing the strength. And even though this deep pullback here, buyers stepped up and drove it all the way back up. Historically, this kind of pattern would have resulted in a lower high, some kind of pattern, and a break lower. That scenario is out the window for now. And the Dow is a bit different, right? Well, the depth of retracement here, and I'm eyeballing it, let's call it 75% from here to here. I don't know. But it came down into support. It's under the 20, right? And so it's come up here this morning, and different setup, but the same conclusion, as to a wait and see from the daily time frame and the weekly time frame as to how this is going to unfold. Russell was pretty strong yesterday. That came back from this little type of a shakeout pattern. It's up into resistance. It's early in the day. I don't know where this is going to end, of course, but it's at resistance. And is it a narrow body, narrow range day, which is going to be easy to break below the prior bar's low if it does hold lower? Or does it go sideways here? So we've got different pictures, but similar analysis and thoughts about what's next here, which is kind of like running in place until proven otherwise. Bonds are going down, right? A little strength here. Bonds are dropping. They're heading down to this targeted area down here. And so one of the things to keep an eye on, which we've been looking at TBT in the newsletter videos. You can see here on the weekly chart, this rounding bottom that's played out, and this little hook pattern on the weekly where this is beginning to move up. And it's just beginning to start to clear the top of the, there was a trading range within a trading range. And it's moving into what we call the void, where this can start trending into this empty area of overhead supply. And so as that begins to happen, this is the 10-year note, which is widely followed. And this is still historically relatively low, but as this starts to move up, at some point, the markets are going to take notice of that. At what point does it make the market nervous? Meaning, hey, you know what? I can go over here and get a pretty good return on my money compared to risk in stocks. So, right now, I don't think that's much of a concern. Taking note of it. Also mentioned for a couple of weeks now, the strength in the US dollar, which has been touted as the dollar was going down. That's good for the markets. And so far, you don't hear much talk of anybody saying, hey, the dollar's going up. Well, that's one of the measures, McGraw, equal to the SPY. But, just generally, as it starts to move higher, those committed to equities will start to get a little uneasy. So we've got reference points as to, bonds coming down into here, and then we'll see how this all begins to unfold. Still early. Oil continuing to push higher. We did get some turnaround action in the stocks. Right? it finally reacted. And so I think this is a good place to initiate. Well, we could look at individual stocks, but as far as an ETF with a stop, below here, as long as oil is going to stay where it is, and this turned around last year, I think these will continue to begin to, it's doing well, but tech is kind of, a little bit unloved, and I think this has been what's been beaten down for a long time, and money, no doubt, has flowed into it, and looks like it can continue to move up. And gold is still not being loved at all. So while there's talk of inflation, gold is not reacting to any of that. So not getting the pattern, but as it comes down to this prior low, we'll see if demand picks up and turns it around. Silver, which was outperforming, right, just pulling back, and that person in MT Live yesterday that unfortunately didn't know what they were getting into and probably knew a little bit about credit spreads and wound up selling a credit spread on the silver ETF 2522, and this thing's dropping down, and they went out to March. So maybe they get saved over time, but a little bit of knowledge is dangerous. Thinking, oh, look where it is. Reddick is going after silver, short squeeze, blah, blah, blah. That must be a no-brainer. Wasn't a no-brainer. And the transports. This whole markets thing as to where the market's going. The further transports can repair this damage, if that's possible. It's coming into this unfilled gap, but the deeper they can move into here, clearly, the more this looks just like a shakeout. And we've got this big sideways pattern going on here. In other words, everything that we're looking at right now, the return back to the high is impressive. Transports were damaged here. I think we're going to be seeing some chop here for a while. So it is what it is. We'll see what it is, and day to day, we'll gather more information. We'll be more confidence as to, hey, trading range scenario here for a while. New breakout, maybe breakdown, but recognizing where things are at and accepting that will save you a lot of money. To you, Dan.
Yeah, Greg, you mentioned silver. That, we made that very clear yesterday in MT Live. That was one of the big benefits of us doing that yesterday, was so people, if they want to play in those forums, which is totally fine, to have the knowledge to know, what's a high probability setup that could be an igniting move versus the sucker play there. Hey, Frank, your drop down, please. But Frank's asking, here, I'll just paste it. All right, he did it. Frank, the answer to that is very easy. All market environments, but if with one exception, we love panicked environments, whether they're in a downtrend or uptrend. Why? Because then we get beautiful multi-day sell-offs and we wait for our reversal on support, and then the volatility is higher and we get paid handsomely for that. So yeah, we do them in all environments because all we're doing is picking up a short-term top or bottom, which we can do every single day. But yeah, I like after sell-offs for the reason I just said. So, in the weekly options trader, we started very, very light with only one trade, and then open trade, and then Tuesday, I think we only had two. And I said part of the reason was because of stupid spreads. And then also it was a little tricky in the market, obviously, but I said, don't worry, we find them every day. And now we're back to 8 opens. They're all bullpup credit spreads. They all look great. So any questions, just ask me. And let's continue with gappers here. There was a ton of earnings, so I already went through and chopped out a bunch of them just for time's sake. And some, yeah, we were looking at that yesterday, actually. Yeah, beautiful, beautiful end of day base. This is one that kind of created support over time because you had this big momentum move, a price void, but it chopped around here and made the turn. So that's gapping up here. So you need to watch a pullback. FSL, it's a turning uptrend, small little trading range with all these tails on the top and bottom, but it's churning its way higher. Apple here, I remember yesterday, this is actually one of my favorite patterns. It's making the turn, right, at the 20 and support. And I very clearly said in the green room, although Apple was lagging the last 2 days, do you remember we had this discussion? I said, hey, how's this picture going to look if today's Thursday, if we take out Tuesday's high? Is that going to change your bias of this? And the answer is yeah, because then it's trading over 3 bars highs. We got a price void. And that's when I fired up my computer this morning, that alarm went off. So it's gapping. Well, now it's just under it. See one, well, no, it's right there. It's gapping right to the high. So a 5-minute high, I'd like long and also a put spread. So that's exactly what I had posted for you. Thomas, FoxF, come. Yeah, it's a breakout. Been going sideways in a strong uptrend, sure. It kind of grinded its way back to the high, and we typically don't buy when I go from the bottom to the top of the range, buy breakouts, but this one, it's more churning, so it actually would be okay. I would put the stop under Tuesday's low, though, that red bar. Overstock was on our list yesterday. Somebody in MT Live brought it to our attention, and we said, yeah, looks good. It's going to be a little harder to. Carrots is asking, where would you put your? Oh, he's asking Oxy. He has a call debit spread. Where would you put your stop? All right. When something gets altitude, as I call it, then I love tightening the stop. So on this one, it should not take out yesterday's low. It negated the red bar, it gapped up, and it was a closing breakout. But if you're swing trading, yeah, I would use yesterday. If you want to give it a tad bit more room, I would do Tuesday's low. But now with the gap up, it should not. And then let's say it takes out the 30-minute high today at 10 a.m. Then I would move it under yesterday's low, or depending on how much it moved, maybe even tighter, maybe under this, under 2150, to preserve the gains. That, it made the turn, and it could be a day trade. Let's continue now with my list. No, Carrots, I just answered that. I just answered you. I said Tuesday's low. I wouldn't, after today's gap up and yesterday's bullish close, No, I wouldn't give it that far unless you're trading a bigger time frame. Then yeah, bigger time frame, you put it under all of this. Yes. Oh, you were referring to Apple. No, 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 no. With the gap up over these two red bars, um, no, it would be yesterday's low. Or in worst case scenario, Monday's low. But once it clears this and takes out a 5 or 10 or 15-minute high, it should not come back. Even if it came in here, this is minor support, and then for it to give it all up and take out yesterday's low, then that would be damaged. LSPD gapping up here, $78. It's a big gap, but kind of a little downside shakeout here. Big trading range, daily, weekly, that looks higher. Kenneth. We have 832, 837. All spreads? Are they called debit or credit spreads? Kenneth, is it a bullish or bearish position? No, they're in the money, so you did a call spread and it went against you. Debit spread, so you're bullish. See why it's important to use the right information so I can help you? Oh, he did say, oh, got it, debit Tesla. Yeah, but then why did he, okay, all right, got it, 832, 837, got it. Hoping to expire, okay, you want it to expire at full profit in the money. Got it. All right, so yesterday, had a reversal bar. I would put a stop under Tuesday's low. And it's still fully in the money, but you would lose your, whatever remaining extrinsic time value. But that's what I would do, Tuesday's low, just to preserve your gains. That's a blast off. That's a blast off pre-market right there. Emmanuel Kern. Yeah, we're in Kern as a core trade. We got a nice marijuana portfolio, like 5 different ones. Yeah, we're in ACB, we're in Tilray, we're in Michael Jackson, we're in Hexo. We had a great portfolio there. Boozy might bounce on falling wedge. I don't see any falling wedge. Have you been hanging out with Debbie? Debbie's our triangle girl. But no, it's a deep retracement, kind of like Apple making the turn, and it's gapping up over this. So that's a watch, actually. I had BTU here, so when it was gapping up, I'm gonna go ahead and cancel that. Let's put Boozy there. Let me get rid of BTU. I mean, I was look at BTU. I was liking it for a core trade. This morning, see it up here at 460, and then I said, "Wow, this is Peabody, so this is coal. Look at this little downside shakeout, right back up. If that pre-market held, um, but it's not holding, so we're going to cancel it. I mean, look, if it was up here at 460, gapping up, I mean, this was my entry over 460, over 1, 2, 3, 4, 5 inside bars. That was the technical setup, but now you're history. Look at these two stocks that have blasted the last 2 days. Now they're gap. Look at that, gapping up 100%. So that to me, 30-minute low. I don't know if they're optionable, but it's a candidate to short a call spread and also short the stock. It was this, and there was one other one. Shoot, where are you? This one, Saba. Look at this. Went from 20 bucks to 101. I'm gonna put this. Oh, that's a bio though. Darn it. But for a day trade, I don't mind. I'll put that in a different window. But that's a beautiful gap and crap setup. Both of those. Let's see what they do. Look at spiders here right out of the gates. Hey Debbie, bunch of earnings here. Wow, Qualcomm getting hammered. Look at the monthly on Qualcomm. You think that's extended? That looks like a intermediate term top to me. That's a nasty gap. Let's keep an eye on shorting a call spread on that. Cuervo Gold here, ugly gap. Click, gap's too big for me. Yeah, Jake, we'll keep an eye on it because we might then go out to next week. But you know, Jake, that's a great example of why I say, hey, dude, look at this boozy though, looks really good. Where I say, hey, I say do it at a limit of this, and that's the exact reason I do that, because I don't want to do it for 20 cents. So it gives me time to reassess. At Austin, Delta actually stopped us out, break even yesterday. But here, this Vuzi for a day trade, 5-minute high, looks really good. This Apple was my favorite gapper pre-market. Now it might turn into this Vuzi. I see GameStop here making new lows. That thing is toast. Vuzi doesn't have weeklies, but let's see. They're too spready. The $11 puts 55 by $1.05. So see, this is just what I've been telling our weekly options traders, that they're too damn spready. What can I do about it? But you know what? I'm gonna send it to them just so they can get an example. But Boozy 5-minute high, I just don't like trading in the first 5 minutes, but so far it looks fantastic. Let's look at XL was another one that I'm just guessing might be moving. Apple's coming in. That's exactly why I said wait 5-minute high.